All right, let's stay in that sector. And lithium is one of the hottest metals on the market, thanks to that upsurge in electric vehicles. Of course, it's required for batteries used in electric vehicles, and it's depleting the stock essentially of that material. To take us through where the opportunity is, Jack Colreavy from Barclay Pearce joining us now. Jack, good to speak to you. Let's start actually what's gone on with Pilbara Minerals overnight. So this was the second auction that's taken place on the battery material exchange. Just explain to us how that played out.
To be honest, I'm not fully across what happened overnight. I haven't been able to fully come across it, but I mean, it obviously speaks to the market of battery materials, especially lithium being such a key component in batteries, especially for electric vehicles. So I think that speaks to the space and the demand needed across it.
Okay, well, let's then take a look at the demand and supply picture as it stands with lithium. Of course, it came off significantly last year. That has thus impacted supply because production was then scaled down. Now we're seeing demand lift, particularly as we're seeing the demand for electric vehicles and obviously the batteries lift. So where's that place us at the moment?
I think that's reflective in the price of lithium, which has come up substantially. It hit the lows in just in the second half of 2020, and it's starting to slowly climb back. It's above 15,000 US a ton, and but it's still nowhere near the highs of 2017 when it was in the mid sort of 20s. And that sort of, again, speaks to the demand necessary. There's always going to be a supply and demand makeup to the environment. And what this price action will do is will spur future mines to come online. And I think there will be a change longer term as more supply comes online to keep a ceiling on the price.
All right, so that said then, how are you looking at the valuations, particularly of those locally listed lithium plays?
Yeah, I think the market in general on the ASX, a lot of them are priced to perfection. So we don't see a lot of value in some of these lithium stocks. They have run very hard, and there is the potential for the price to kind of hit that ceiling as more supply comes online. So we are a bit worried about lithium stocks on the ASX. In that regard, we're turning more towards manganese. Manganese is a bit of a forgotten battery stock, but it's a key component in the NCM chemistry, that being nickel, cobalt, and manganese. So especially with cobalt a bit on the nose and battery makers looking to phase it out, manganese will have a bigger role to play going forward, and we see a lot of potential growth there in the future.
Okay, which companies are in that space at the moment to take advantage of the demand for manganese, which I gather is also used to harden steel?
Yeah, so low-grade manganese is used to harden steel. South32 is one of the biggest manganese producers in the world, and that's a stock I really personally like because it does have exposure to manganese, but also aluminium, which is used in solar panels, nickel as well, silver. So they've got a real wide range of exposure to the renewable energy sector in general. E25 is a really interesting one as well. They just in July, they had their first shipment of high purity manganese used for cathode batteries. And they're looking to expand production and also go into that zero emission type manganese, which has proved really well for Vulcan Energy, who were doing that in the lithium space.
All right, that other element, of course, that you mentioned there, that metal nickel, we've seen where that price has gone to recently. Are you seeing any opportunity there?
Unfortunately, I think nickel is a bit like the lithium stocks. That's really priced to perfection there. Nickel near all-time record highs as well. And rightfully so, Tesla have said that nickel will be one of their key battery metals, and they see Australia as a key supplier in that space. So Again, looking towards value, we see more value in the manganese stocks rather than nickel or lithium. And then, as I mentioned before, cobalt, we don't see a bright future in that, and so we're tending to avoid stocks in that space.
Okay. Jack, look, an alternative then to the metals is actually hydrogen, and we're a bit, I guess, it's still to be fully developed just as far as efficiency and pricing is concerned. But are you seeing any particular opportunity as far as green hydrogen is concerned?
Yeah, green hydrogen is a huge opportunity. It's very early stage at the moment, so a lot of the key investments are happening in that pre-IPO space. But a lot of these companies are starting to mature and will hit public markets. I think 2022 will be a big year for green hydrogen IPOs. At Barclay Pearce Capital, we're currently raising for Sweetman Renewables, which is in biomass to hydrogen space. We worked with Verdant Earth Technologies, who are looking at a NASDAQ listing in Q4 this year. And then we've also worked with Infinite Blue Energy, who have one of the largest plants in currently in planning stages over in WA, and they're looking at an ASX listing in Q1. So there's a lot to come to the boards in 2022, and I think investors should be on the lookout for green hydrogen plays into the future, because Australia will be a renewable energy powerhouse in the production of renewable energy, and we'll be able to export that production through green hydrogen. So that's why it is so important. So Barclay Pearce is putting together a panel discussion with some of the chairmen of some key green hydrogen companies this month.
All right, Jack, we look forward to following that conversation. Thanks so much for joining us from Barclay Pearce.
Thanks, Andrew.